And we are live, folks. Welcome to this week's Tuesday Night Live. We have special guest, Wayne. Thank you for joining, Wayne.
Back again.
Back again. It's been a while. First time this year for you, yeah?
Yes, first time. Yeah.
I've done many this year, so yeah. On that note, we're going to jump straight into it. We're going to talk about, here's a deal for everybody, right? I tell everyone, yes, Sam, inflation's more exciting than married at first sight. Exactly, right? Exactly. We're going to divorce the dollar. That's what's going to happen. Today, I've got a few articles here. I'm going to make a few predictions today, so stay tuned for that. And I talk about deals that I buy for 50 grand, 100 grand, 200 grand. People say it's impossible to buy a property for 100 grand. It's impossible to buy whatever. What can you buy for that? Here's a new one for you all, folks. I knew this was going to happen. I was 16 years old. The only piece of real estate that I could buy. Do you know what I bought at 16 years old? A fucking burial plot, right? Because you're allowed to. Yeah, you're allowed to have a title for a burial plot, right? Because I knew that you can't bury all these people. There's fucking so many people. You're not going to be able to bury them. So the time we cark it, hopefully a long time down the track, you won't be able to bury people. You have to cremate them. And I don't want to be cremated. So, I probably want a big fucking tomb, like a big vault when I'm dead nowadays. But anyway, that was it was a nice thing, right? Family, people can be dead together or whatever. Burial plot advertised for sale in Sydney graveyard for $100,000.
It's the best view in Sydney.
Best view in Sydney, yeah, you're just fucking dead. Sydney housing market is wildly expensive, nothing new, but a sign that nothing is sacred under the Harbour City when it comes to property. Burial plots are now being sold for $100,000. Eyebrows were raised when an advert appeared on Facebook Marketplace for a double burial plot in Waverley Cemetery, close to Bondi and Sydney's east, that broke six-figure mark. The ad states that this plot is used like new, right? You just got to move the bones out, right?
110 years of...
Yeah, you got it for 100 years, right? It's once 100 years is over, then move on over. So it's it's interesting, right? Even when you're dead, you can't even control the land, right? So it's important to put affairs in place while you're alive to be able to control beyond the grave. But another burial plot in the same cemetery, 55 grand, discount from its original price tag of 70,000. That's for a single plot. Just interesting, right? Just interesting. 100 grand for a block of dirt to die in.
Can't take it with you.
Can't take it with you. You can certainly try to, right? You certainly try to. Don't worry, kids. We'll spend the inheritance. Bury us. It never existed, right? Just like us, right? We joke about it. Gold, silver, commodities, God's money, as other people say, like Kiyosaki or whatever. That was created here before we came, right? And it's lasted thousands of years, but the fiat Ponzi currency that we use is, it comes and goes, and it's not sustainable. Just like our health and the time that we get to stay here on Earth. Anyway, get off all the depressing stuff. Here's some fun stuff. This article here, a huge number of Aussies are risking a debt bomb disaster with long-term consequences. Millions of Australians are sitting on a debt bomb that could go off at any moment, wreak long-term havoc on their finances, experts warn. According to the annual Finery Credit Card Report, 13% of people with plastic, the equivalent of 1.8 million Aussies, have missed a recent payment due to rising cost of living pressures. That's an interesting number, because what do we deal with every day? Finance, right? And if we've got 13% of the country that can't pay their credit card, well, then they're not going to have a credit file. They're not going to be able to get a car loan. They're not going to be able to get a home loan. It's going to keep them stuck in that trap. The only way out of that is for them to lax all the credit policies. And what happens when you lax credit policies? You're really manipulating currency out there. And then what we're going to see is become easy for everyone to get currency. And there's the next boom, popped in. You only get 14 days grace before it'll be recorded on your credit file, and that your repayment was late. So these are people that have been reported. How many people are unreported on their credit file? Details of the late payment custodian credit file for 2 years, and while a single payment is unlikely to affect your credit score at first, if you continue not to pay or miss repayments, it could have a serious impact. This can lead to higher interest rates on loans and make it harder to get approval on a new card or a loan in the future. More than 13 million credit cards are currently active in Australia, with a combined interest incurring debt of $18.1 billion. Yeah, that's all I'm going to read from there because I've got some very long articles, right? And this sort of gets into some of my predictions, right? I've said a little bit lately, this one here I'm going to share with you is gold in crisis is German hyperinflation. I went on a little bit of a journey the other week. I was sitting in my sauna and I was just listening to some stuff, sending some messages to some of my mates, talking about hyperinflation, and I'm like, guys, we are in a hyperinflation. And in the room next door, I took some videos a few years ago and drew what a hyperinflation would look like. And I said it wouldn't start before 2023, 2024. It'll be about 3 years to get into a hyperinflation. But once we're in that, it's a period of about 7 years, right? And I was thinking, what are all the signs? And I went and researched, did a lot of research into previous economies that had collapsed and looking into many different articles, many different bits of data, and there's like some common occurrences that occur. The governments went broke beforehand, wars broke out. The funniest and the most chilling thing is like the taxing, right? The taxing, and we were chatting about the other day, tax, right, just in general.
Yeah.
The governments are broke, right? They're broke. They don't have money, right? So I was speaking to a few of my mates that work in construction, specifically into government projects. All projects in New South Wales are on hold. They're not launching any new schools. No, nothing's being built at the moment. And my only thought behind that is there's no fucking money. There's no liquidity out there in the system to be able to fund this. And we're heading into that point at the time where if you look at all your suppliers, they're chasing money much quicker, whether it's electricity gets done quicker, phone bills get chased quicker, whatever. There's a liquidity squeeze and all these corporations are in dire issues. And it comes right down to our government, which has taken on $1 trillion worth of debt. They can't fund it and they're trying to get this tax, and the tax is, they're going to be Gestapo-like. So, hey Jonathan, I'm reading your message there. Thanks a lot for that. I appreciate that. I can't repeat that what I'm reading here. But funny. But yeah, looking at what is happening out there in the market today, there's a massive, massive issue globally with money, and it was just the chilling part. I forgot to say the chilling part is that all production of parts or whatever, there was a supply chain crisis, so you couldn't get access to anything. So just like we've seen, they go, oh, you can't get the chips, you can't get the cars, you can't get this, you can't get that. It's like no one wants to part with their item for the cash, right? And then they start going, well, we want more cash, and they push the price up of the item, and then it gets more expensive, and then everyone else goes, fuck, we need more cash, and it starts rolling out of control. And looking through all the data, looking through all the history and the times that hyperinflations have occurred throughout the world, I made a call the other day, and I think we're 30% of the way through the hyperinflation. 30% of the way. And I did an explanation of this a long while ago, and I used the analogy, right? If we had 1 hour and we were sitting at a stadium, right? I don't go to football, any of these fucking Taylor Swift satanic rituals that they play, none of those concerts. Right? But if we went to, what's it called, like the Sydney Olympic Stadium or whatever? Accor Stadium. Let's say we're there and we're sitting right at the top, right? And we're looking down and there's no one there, nothing there, right? And then just one drop of water drops in, right? But there's something that happens, right? Every minute that water doubles, right? So you have one drop this minute, and then next minute you have 2 drops, and the minute after you have 4 drops, right? Within 60 minutes, within the hour, that whole stadium will be flooded, right? But you wouldn't notice until the last 5 minutes, right? Because it's a build-up of all that momentum that is happening, right? The drops of water are compounding, expanding. And it's only at those final stages that you just start seeing that, fuck, it's flooded, right? Let's call Noah up and get his ark, right? Let's get the fuck out of here. And that is what's happening with our currency right now. They are printing way too much of it. And no one's seeing the warning signs, right? And this is like fucking red alert. And I don't think it's going to happen in 2024 with hyperinflation. But what we've got to do in order to overcome the situation that they've just created is to create the premise for that. And I always said that after our last crash that we had, which was 2018, 2019, that it's going to be one more cycle after this, which is the cycle we're about to head into, and that will cause the hyperinflation. And yeah, if we go on to read this article here, I'll share it in Birch feed later. So if you're not on Birch feed, it's free. I need to be a tight ass, just go to birchfeed.com, follow the path to join up. It's a Telegram channel, download Telegram, get into the group. I post out some random stuff. I'll post this in there later. This goes on to read inflation. We first take a look at inflation, hyperinflation, and after that we'll search which factors led to the depression of the German paper mark and resulting in hyperinflation in 1923. So we had the 1923 hyperinflation in Germany. That's when Hitler rose to power, but it didn't happen in 1923. It happened in 1914 with the war. So what is inflation? Inflation means a decrease of purchasing power and increase of prices of consumer products and services. Inflation levels are traditionally measured with consumer price indexes to track the price development of particular consumer goods. For example, in August 2022, the Eurozone CPI had risen 9.1% to August 2021. The fundamental cause of inflation is that central banks create more money into circulation. If central banks want to control inflation, they strive to decrease the amount of money lent in circulation. This is attempted by raising the key interest rate. When the key interest rate is raised, common banks hike the interest rates as well, which makes loans less appealing, thus turning us to curb consumption with this inflation. But the thing is that no one has any money anymore. They only have debt, and debt is money, and they need to keep printing this money. And my next article will explain this into very much. I've got some slides here that I'll share with you, which are separate slides. They're from the Fred website, which is the Federal Reserve of St. Louis, which this year is going to be amazing chart. So make sure you're watching this and tag all your friends and family that watch this because it's going to be wild. So here we go. German hyperinflation. A prolonged period of inflation preceded the German hyperinflation from 1914 to 1921. In 1914, Germany was prepared for World War I. And in order to provide the finances for this, Germany delinked the German mark from the gold standard. Because the German mark no longer corresponded to a particular amount of physical gold, thus was not tied to an amount of gold owned by the German state, they could print as much money as they wanted. The so-called paper mark or paper mark became the sole currency of circulation. The currency change was followed by issuing new wartime bonds and debt instruments in order to finance the war. The new money ended up funneling into war equipment, so the goods required by the civilians. The demand for the civilian goods exceeded the supply by far. Since there are simply not enough goods available, the result of the price of consumer goods skyrocketed. In 1921, the price of rye bread had risen 13-fold, and that of a beef 17-fold compared to 1913. The same period, milk, pork and potatoes cost 28% more, whereas butter ended up being 30 times more expensive. After the war in 1923, Germany also supported the passive resistance of German workers in the industrial area of Ruhr, which occupied the Allied forces in order to persuade German workers not to cooperate, blah, blah, blah. All in all, the amount of money Germany was raised too much in the short term. At the same time, consumer goods were not easily available due to the insufficient production and cut jobs. This resulted in steep inflation, which ended up destroying the paper market in November 1923. Now, if we look at that, our currency really died, like the whole financial system died and went into palliative care in 2007, and we don't realise it, and then it died again in 2018, and Corona was just convenient enough to be there to hide all that, and they've taken away all the veil of what they put through during that period of time, and now we're starting to see it all raise its head again.
Well, that's when they went into debt.
The debt was skyrocketed.
Yeah, it was a surplus.
Yeah, and I know that Sam that said he loves watching this instead of Married at First Sight, and he talked about inflation. Every week he posted about inflation. And I know he always posting there about the figure of what the global debt cost. sort of inflation is at. And the US debt at the moment is $34.5 trillion of debt. And I remember when we laughed and it went to $33 trillion worth of debt only a few months ago. It has gone up by $1 trillion of debt in 3 months, right? So 3 months, the US debt has gone up $1 trillion. Why did that occur? Because they pushed up the rates. They're killing the currency even faster rate because they're trying to control it.
Yeah.
There's no way out of this, folks. There's no way out of this. And the more that they play with it, the more it's going to blow up. So Andrew said he bring back cash. Cash has been legitimized via card and paper trails, which are causing inflation. Look, the cash is to stop the off ramp, so you'd have a bank run if you had to go get your cash out of the bank. There'd be a bank run, and then you'd see that you've been robbed. But everyone's been blindfolded and blindsided by the fact that they're not using cash. It's just easier to tap it.
It's funny, we're at Messina today
Yeah,
for lunch,
yeah,
and Nikki in the team,
yeah,
she always pays with cash.
yeah.
But she asked first, do you accept cash? It's
Yeah.
like, how odds?
Yeah, wow. I need to ask her about that, right? Or
Yeah.
why she pays for it. Does she pay for it because she's against?
I don't know
Okay.
what her morals are or anything, but
Yeah.
she just has cash.
Yeah.
Yeah.
I'm
But
intrigued
to ask a
Yeah.
shop if you accept cash, it's a bit odd.
Yeah.
So,
It's legal tender, they've got to accept
Yeah,
it,
yeah.
but it's just the world we live in. It says here, this is the interesting part. In October 1923, German tax revenues covered only 1% of country's expenditure. The remaining 99% were financed through printing of money, right? That is the era we are heading into. The government cannot claim the taxes to be able to pay the debts that we have, so they have to print more. The more that they print, the quicker they're going to create inflation and so on and so forth. And people are starting to realise that, but it hasn't caught up yet, right? This next decade, I wouldn't even say a decade, there's about 5 to 7 years left in the cycle, in my view. And depends what levers they pull and how quickly or how slowly it happens. But the government can't survive, right? The debt levels are too strong out there. So if you're too over leveraged, you'll get wiped out. If you're too under leveraged, you're going to get wiped out in this next cycle. And it says here, an additional 40 trillion marks of private commercial bills, 402 trillion marks worth of cash were also in circulation in the same year's November, that simultaneously the state issued an equivalent of so many emergency money. Let's throw this down somewhere. So, let's put that there. You can see the level of death of the currency there. Like it started ramping up and then it went into hockey stick territory. We're probably about here at the moment in this phase there. This is exciting. Assets during hyperinflation in 1920, 1921, the stock market rose nominally, meaning the value of stocks increased numerically. In reality, the losses were bigger than the profits since the value of money had weakened considerably, which meant that you could buy less with that money. Back then, the stock market got hopes high for many, which resulted in a nearly year-long boom. The most profitable stock market 3 years ago, guess what it was?
3 years ago.
Yeah, 4 years ago, 4 years ago.
Before the...
Yeah, it was before the thing, yeah.
Okay. Was it the Aussie?
Zimbabwe.
Oh, Zimbabwe,
Right?
okay.
It made like 1 trillion% profit, right? But when you took it out of that currency and put in anything else, it was a shitless performing economy. And it's the devaluation of the currency of that state. This time it's going to happen globally.
But you've got like Argentina and Greece, they're all going through hyperinflation now.
Lebanon.
Lebanon.
Everyone's currency is disappearing. And like I've got an article here that I'm going to read later. It's come from a property spruik. I don't even know how I'm on their subscription list. I got my email address from somewhere. Property spruik sent me something. It's like, this is pretty good. I'm going to share it with you. Everyone. Bonds. Here's about your bonds, right? You put your money into a term account. When you invest in bonds, you provide the capital in advance for which you expect a fixed interest rate after an agreed period of time. The interest rate is the reward for the investor for the loan that they give out. At the same time, the interest is the price that the lender pays for using the money in advance. If inflation increases between the bond's date of issue and the date of repayment, the investors become less attracted towards the bond. This happens if the inflation is higher then the interest rate of the bond sits in, the yield for the bond is lower than the increase in cost of living. In other words, the bonds holder loses purchasing power even though the investors believe bonds to be a predictable source of income. Periods of high inflation drain their profits, called an inflation risk. For example, the fixed interest rate for a bond is 4% at the same time as inflation is 3%. This means the real return for the bond is 4% minus 3%, so 1% up. The higher the inflation, the bigger the expectations for inflation, the bigger the bond's interest must be for investors. In hyperinflation, the inflation figures are over 50% per month, meaning the bonds are usually amount to nothing. Right? That's why I always said that debt becomes irrelevant with inflation, and when we see a hyperinflation, it will become a valuable asset. Housing. The problem with housing that I've realised, and this is something else that's a trigger and just something to be aware of, is when nations go into hyperinflation, generally the housing gets hit at a certain point, and that's when they control rents. So rent controls are a sign of hyperinflation. They're one of the key factors, the key indicators of a hyperinflation incoming. So we will see that stuff happen to us, but by that time, you can literally pay your house off with a Big Mac meal. And I've said it. It was only one day I said, I've got a mate I go to the gym with quite often, and we're walking one day, and he's like, I saw you live, and you said on there about paying at the Big Mac. You fucking told me this for like 7 or 8 years, and I'd never even listened to you. But it was only when you said it last night on Facebook Live, I realised I could pay out my debt with Big Mac, right? And that's the world we're coming into. So, yeah, if we look at Bitcoin today, it had $110,000 Aussie for Bitcoin. Did the Bitcoin get better, or is the money or the currency that we're using lost so much of its value? Yeah. Housing. What is common among countries who suffer from hyperinflation is a tendency to set price caps. For example, German state regulated price level of rents from 1922 to 1923, and thus the local housing markets were destroyed. Rents could not be increased quickly enough to keep up with the accelerating inflation, which meant that the profits apart from apartment owners were destroyed and businesses became unprofitable. The housing markets quickly became non-profitable investment because the rents could not be increased. At the same time, the maintenance cost of the apartments swelled alongside other products and services. Many landlords' apartments stopped yielding profits since the rents could not be used to cover the overhead cost, eventually resulting in the relinquishment of the apartments. So that's very important, right? And I say that now because people might be watching this saying, Birch, you say buying property is great for inflation, hyperinflation, you're going to do very, very, very well. There'll be a point where it's not profitable to go buy a property, right? If you buying a property at 200 grand, 300 grand, great, right? But if we look at the currency getting debased, and have you been overseas, mate? Like, I don't go overseas, I don't travel, right? But have you ever been like Thailand, Bali, something like that? What would it cost for like a burger or lunch or dinner, roughly?
Oh, probably a third of the price.
No, like the base currency over there, like is it $100,000?
I never understood it.
Yeah, you never understood it.
I never understood.
It's nothing, right?
Yeah.
It's nothing.
Yeah.
But the currency over there, would it be odd to see 500,000 something to get a burger or a dinner?
Yeah, there's like India, like with Bali, paid rupiah.
Yeah.
So it's like 1 million rupiah.
For what?
I wouldn't have a clue.
1 million rupiah?
Yeah.
For what? What would you get?
Nothing really.
Nothing, right?
Yeah,
so their currency has been destroyed tremendously. And if we see inflation here, a 50 grand income today could be $1 million a week income in the future, right? $50 million a year, you'd think you're rich, right? But if you look at countries that have suffered hyperinflation, a box of eggs is $1 million, right? And if your debt is 200 grand, you can pay it off easy. There's a point where you want to pay it. So if you notice here, it says here, the German states regulated the price of rents in 1922 and 1923. They didn't control the price of rents in 1914, 15, 16, 17, 18, 19, 20. They controlled and they put these communist measures in place in 1922, right? And it's after everyone had been robbed. It's not by chance, and I'm very cautious of what I say about this because I could get the video wiped and everyone would hate me for this. But it wasn't by chance that someone just became powerful over there, right? A certain person over there became powerful, right? I could probably get done to that. But like, you all know who I'm talking about. He rose to power because everyone was robbed of their money, right? And that's what happens. People rise to power, bad things happen, whatever. People were robbed. The housing markets quickly became non-profitable investment because the rents could not keep increased. At the same time, maintenance cost apartments soared alongside. Yeah, I already read that. Goes on. This is about gold and silver and stuff. It's like a bit of a thing about gold and silver. So we'll leave gold. Gold's pretty good. You can see gold is at an all-time high again today, right? 3,200 or something Aussie. Those who kept their wealth in the local currency or in other assets grew poorer as the dreadful monetary policies of the government and ensuring money creation ruined the German mark. Those already back in 1918 had exchanged German marks for gold and the US dollar. That was the gold standard feared best during the German hyperinflation. Their purchasing power lasted even through the market crash. The gold later gave them an opportunity to buy very steep stocks, apartments, or whatever. So, what is cheap for an apartment, right? If you're paying $5 trillion for a fucking unit in Mount Druitt in 20 years' time, 10 years' time, it might appear as being expensive to us today, but we haven't seen that our dollar is worth as if we're swapping a Big Mac for it at that time. So that's the reality. In summary, let's look at this. This is a wholesale price index here. The chart just took off. German hyperinflation was caused especially by the lackadaisical monetary policies of the German government. The German market was dealing from the gold standard. Well, that happened in August 15th, 1971. President Nixon took the world off the Bretton Woods and took up the petrodollar. Same thing happened here, which meant the unlimited amount of money could be printed. However, the production was mainly focused on war equipment, whereas certain civilian goods. If you notice, everyone's going to war now, right? And it's like it's a price war, then it goes to a hot war. Someone will blow up someone, and I reckon that the Western world, as people would know it, is dead. Our whole life, we've known we get cheap shit from China, and remember those cars like Mitsubishis and Nissans in the 80s and that they called it Jap crap, right? So it was just cheaply mass-produced vehicles from Japan back in the day, right? And then went to China, and these guys became successful. They became the power because they created, they produced, they made things. Like we're just producing debt and living on a big Ponzi scheme of credit, which is how the whole system in the West is surviving. Like anything, you have a big bender, you're going to have a hangover one day, and we're going to have that hangover. So interesting article here. I'm going to leave that for now and go to this chart because this is the important part, right? This is the important part. This here is a chart I got off Fred, right? And it looks like, I don't know, someone that just died suddenly, right? You can see here, this is 2000. I haven't even looked at the dates here, right? But I'm assuming that this here is about 2007. This is about 2020. Would that be right? Yes. Because what happens is when you've got these grey parts, that signifies a recession. So it was the recession of the GFC, that was the recession of February 2020 when the world got locked down, and it's flatline, right? But then when you look here, what does this stand for, right? And we go back over this side and we see hundreds of billions of dollars or trillions of dollars that are here. What the fuck is this? So let's look at what this chart really is. And this is the last 12 months. So this is the assets, liquidity and credit facilities, loans, bank term funding program, right? That's the bank term funding program. So if we have a look at this, going back in March 2023, what happened, right? They printed $100 billion, right? And then there's $200 billion. So something that never existed through the GFC.
They did that because they were broke.
Correct, right?
Yeah,
so what happened? What happened that they had repo, which is the repo market, which is a repurchasing agreement. So every day, when the banks closed, do you remember when you used to have the banks and it'll take you like 3 days for your money to transfer from one account, and now you've got OSCO. That's called, it's a repurchasing agreement. The banks all settle their accounts and they go, okay, $1 million goes to you, $2 million goes to you, whatever, it floats around. But the banks started going bankrupt and then no one trusted the money, so then the central banks had to jump in and do repurchasing agreements, which ended up being like $100 billion a day, $200 billion a day. That happened throughout 2019 until the end of that year, and then suddenly never got talked about the repo market, which was in the trillions of dollars by the end of it. That's when the yield curve inverted back in 2018, and it took out 2019. And if people don't think it was a scam, like in March 2019, or May 2019, interest rates started dropping for no reason, right? Why would they drop? You had a perfect economy, etc. Right? But it wasn't. This here is 12 months. This here is max, which is like 10, 15, it's like 20 years. 20 years, you had no money being printed into this, and then last year, here's our new facility. That's what it looks like, right? Now, we're 12 months on, and we're heading into about the 12th of March next week, right? March next week is 12 months of this facility. What happened last year is we started seeing banks going bankrupt, right? Credit Suisse, like the biggest banks in the world, all started blowing up because their debts were unprofitable. Just like we read in the hyperinflation there of 1914 to 1923, the bonds were blowing up. So the asset of the bank was based on the interest rate of like 0.5% or 0.25%. It doesn't work after it gets to 1%, 2%, because it becomes unprofitable, and then the value of the book loses all its value. The banks have tried to catch a falling knife by going to buy it. So all the banks that bought the exploded banks, you'd think, okay, a bank's gone bankrupt, let's go buy it, we can make some profit from it, right? But no, what's happened is that those banks that took over the bank, now they've gone bankrupt because the banks they bought went bankrupt, plus they're going bankrupt and falling into the hole as well. So a lot of this debt is rolling over the course of this month. So what's that going to mean? It's going to mean that we're going to need to bail it out, we're going to have to print more money, and we're going to have to fix what we're presented here with. So looking at the amount of currency creation, strange little dog, maybe the cleaner, maybe. Who knows who's he? We'll soon find out. Someone's got a swipe card. That's going to get bigger, right? And when they keep printing this money, it's going to flow out somewhere, right? And has to have a profit, has to have a return somewhere, and it's going to blow this system out of the water even further. So on here, I'm going to read through just a few of your comments here because there's something important that I saw there. It says here, the Bank of Birch times, no, everyone should be their own bank. I've got certain financial instruments. I was chatting to you about it beforehand, Wayne. Like there's certain financial instruments I've always talked about that have bought 25 years and invested in some assets, way before property as well. That you can build wealth for yourself. You can have your own bank. Everyone should be their own bank. Would I give money out and lend it to anyone? No, because I value that capital myself. I want to borrow money from everyone because that's the asset. So lend me money. I'll pay you 10%. I'll pay you 15%, whatever, because I can get better returns from that capital elsewhere. Stephen says here, when the other banks go bust, you can come take the opportunity to buy them out. I just said that that's ideal, but they're blowing up as well. It's who's got the grenade, right? We've got a Russian roulette bank, right? It's who's going to catch it, and the music's going to stop, and their face gets blown off. The economy is in a bad way here in New Zealand. It's going to be hard for the central bank to pull us out of this mess, even if they start dropping rates. In 2018 or 2017, I did a mentoring program explaining exactly what was going to lead up to what I call the global financial depression. It's a hyperinflationary depression. If someone wants access to that, it was like an 8 grand course at the time. There's like if you client a bus, you get it for free nowadays. It's pretty old. It's like 5, 6, 7 years old, but it's interesting to go back. I looked younger, probably looked fatter too, but I was going through reading the news at the time, explaining what was going to happen. And I know Stephen, I think you were a part of the mentoring program as well. And I remember very vividly saying that there would be a few new instruments that would be created out the other side of this, and that we would have the IMF coming, right? So previously in 2008, we saw the banks go broke, we saw companies go broke. This time we're going to see countries go bankrupt, and we're going to see central banks go bankrupt. But who will take out those central banks? It is the IMF, the International Monetary Fund, and I've said this for a very long time. The bailout will happen from the IMF, and it will be actioned by a thing called a special drawing right, which is SDR. And it's videotaped from like 2017. You can't hide it, right? I had a big beard, I think, at the time too. It was like, it sounded fucking crazy, right? It sounded pretty mainstream. It's like, oh, you're just talking normal stuff now. But within saying that, the the special drawing rights would be like a basket of different currencies, right? And we go and look at that now. We've got creation of BRICS, and BRICS weren't around going back 6-7 years ago, and these agreements that are coming through, and it's a way to be able to trade through this, and it's a shift of power, and that's why there's wars and there's talking about these people are bad. You read the news, it's like this person's bad, killing this person. It's like, hang on a second, you're trying to steal their shit and put something there to take over their controlling power. So it's just war games, but yeah. It's pretty crazy, but there'll be a way out. It'll be from the special drawing rights from the IMF, so keep an eye on that, guys. Hinder says, do you believe we are going towards a 1951 Australian high inflation of 23.9%? I think 23.9% would be lucky if you had that in a day, by the way we're going. We're going straight out to lose our currency. We lost our currency back in 1966, and they just polished over it. If you notice, a lot of countries went from the imperial system to the metric system. So pounds and the pence, dollars and the cents. It was the 14th of Valentine's Day in 1966, and everyone got money. But the pounds and the pence and the threepences and the shillings and all that were removed, which had silver content in them, and we got handed 5, 10, and 20 cent pieces, which look silver, but they're really just copper nickel. Which now that's been inflated so much, the coin of 5 cents is worth more than the actual, the face value of it. But what happened then is there was silver content got removed, and you had around 1966 50 cent piece, which now worth like $18. They sold on eBay for. The silver content's about $13, $14 for a 50 cent piece. And that's because our currency died back then, and we've had printing ever since, and those plastic cards, and she'll be right, after pay our lunch. Fucking after pay their poison that they get from a pizza shop or something. Hope so, Zach says here, but they'll report it's much lower. They will redefine the basket of goods to manipulate it and make it seem like it's less than half of that. Correct, CPI is a big lie, it's called CPI for a reason. Chad says that is why New Zealand has high immigration like Australia, and I'm going to read that property spruiker that sent this thing through because I thought it was pretty good, right? And won't give credit to who it was. Maybe I will. Maybe I don't know this person actually. It's a I won't give it because I said a property spruiker, but if you've got the email, you probably know what it is. It says here, it has Canadian flavours, but their boom is built with the same bones as ours, right? So we're talking about New Zealand, we're talking about this. This is the article here. I thought it was pretty good, actually. It says here, hi Nathan, someone flicked me a kind of mind-blowing report on the Canadian housing market. If you think the Australian market is tight, have a look at what's happening in Canada. If you think the Aussie property market has no more room left to run, then look at what's happening in Canada. The thing you'll note here is the exact same dynamics are playing out in both countries. A little more bonkers over in Canada. So here's all the report from the National Bank of Australia, a private bank, not a government agency, it says. What they note is the Canadian property market is buckling under the weight of massive surge of immigration. Canada has completely unprecedented 1.25 million people to the population in 2023. They added 1.25 million people, right? Why the fuck does every Commonwealth sort of, under the monarchy sort of country have all these, people coming in, right? And you say that the US have got like Mexicans running across the border, whatever the fuck it is, right? Everyone's got these immigration issues. We are actively seeking to bring people in, right? And I won't get into common law or maritime law and the straw man or your identity and the tax that you're being sold for or traded on the stock market or anything like that. But immigration of someone moving to the country is migrating to the country due to the fact that there's a big process because they're trading your commodity. You're a tax slave that they can get $500,000 out of in your life or $1 million out of in your life. So you're a valuable asset, and that's what they trade on. Like we're trading on that. We'll take X amount of people from this country. They're just deals that are being done. So yeah, here we are looking at this. The charts is what I really got stuck at. Canadian population growth of 2023 was 3.2%, 5 times the OECD average. This has created epic housing shortage. Look at the ratio of working age population to housing starts. So this here was 19. That was a statistical. That's a statistical error here, so that's not right. and that was the baby booming era, and that was people that migrated from Canada back when Canada was fuck all, right? This is it now, right? Look at the level of immigration, right? That's inflation into the system. You can manipulate currency, you can manipulate certain things, but we need more tax slaves. So each country, like I say tax slaves, I've had people comment on my videos saying you're being racist or whatever. We're all tax slaves, right? So let's just get that right. But we can't breed quick enough to have more tax slaves. So you need to have migration of tax slaves so we can get our base up quicker to pay our debt because we're taking on too much debt. So then you go and have a look at this chart which says the housing shortage that's there, which when you look at that, it's never been so low. So you've got all these people, then you've got the cost of, you've got the cost of building going up and all those sorts of things. Pretty epic. There have been effectively no housing supply response. Housing starts tracking along with historical averages. So when you go and see all these commies that are, fucking avatars that are placed there. What's his name? That dweeby guy that's sleazy, Albert Sleazy that's there, right? You look at it, it's like, who's placed him there, right? He'll go, oh, you go and talk about fucking lattes and tax and negative gearing and wealthy baby boomers, and it's all these greedy people, right? But he hasn't said, hey, my policy of bringing in fucking tax slaves has fucked the economy. He hasn't said, hey, we fucking robbed you because we printed out trillions of dollars. I've heard that, his predecessor, Scammo, that was in there, was like, who cares about who wins the election? Whoever wins the election next is fucked. And I said that beforehand, I'm politically atheist. I used to be very liberal growing up. But, it's all a game. It's out of their control. So you hear him going, and he's talking shit like a South Park character, right? But in reality, it's his policy that's fucking everybody, right? So if we have a look here, builders keeping up pace, not keeping up pace, right? So this is Canada, this is the builders, that's where they should be keeping up, but the builders are going broke at this point. So they can't build quick enough, right? And we need more. If we don't bring in the migrants, it's going to blow up. If we bring in the migrants, it's going to blow up, right? So owning assets that are built, people go, oh, what about building a house and all this sort of stuff? Building a house is stupid. If someone built a house in 2024, lucky you've got to get your builder to survive the 2 years that it takes you to do. You've got to finance your way through it. Inflation's going to fuck you over. The opportunity cost from it, and it's just too expensive. And there's nothing to be had. The risk is all caked onto you.
The government's training immigrants before they come here.
Mm.
Yeah, they're investing into courses and trades.
Yeah.
Before they come. So
Yeah,
they come here, they're qualified.
It's great. It's
Like a
amazing.
certificate, yeah.
It's amazing. I love it. I love sitting there because if they didn't create this scheme, we wouldn't, like, everyone out there in property is talking about, the property's great, the property clock's here, here's my flip chart about how property's going to work. But they don't understand how the economy works. So you need to know, if you're going to make money or capital or cash flow, what is it that's working and what is it that's causing these things to occur? And I think it's amazing, the opportunities. Yeah, like I said before. This article, this is very important, right? This is from NBC, which is the National Bank of Canada. Economists estimate that to keep pace with population flows, Canada needs to build 480,000 units in 2022. And if you notice, they use the word units, not houses anymore, because they're pushing everyone into China-like style, buildings. And that's the whole landscape that Australia's going to be in shortly, is building units. And fortunate enough, if they build a new unit, then the building's going to be $1 million for a little 2-bedroom unit in the city if you're lucky. We're buying units for $200,000, right?
Well, they're also, I lived in Toronto in Canada, and the land is sort of locked.
Yeah, like
to
Sydney.
the north. Yeah.
So it says here, you need to build 480,000 units in 2022, 725,000 units in 2023. These are completely unrealistic numbers. Housing stats only come in at 241 and 263 units in those years, with residential construction sector has never exceeded 274,000 units on an annual basis. So they're building 1/3 of what's needed, right? So the pent-up demand, you can see the charts there, is off the scale, right? And that isn't just to Canada. My next article is all about Australia, right? I'm just going to leave it like that. I thought it was really interesting because you think that we're here in Australia. You think that we're alone, right? But there's central planners that are controlling this shit that are much greater than your property prime minister or whatever. Picture of his little fucking head. Here we are looking at an article. One of my team sent it over yesterday. It says, "The recipe for disaster. Australia faces housing crisis amid surge of migration and decline in building approval." So you read that and you're like, your mum will call you up and be like, "Shock horror, you're going to go fucking broke, Nathan. The houses are going to collapse," because she's read the fucking news, right? But when you really look into it, the headline doesn't really add up to it. It says here, Australia is heading for an economic and humanitarian disaster. If you really want to talk about humanitarian disaster, maybe we'll talk about the food they're feeding us, the seed oils and poison and all that, but that's slightly different. With a limited new homes for locals and simply nowhere for migrants to live, a leading economist has warned, inflation has left millions struggling to meaningfully save money while others are being flat out crippled by surging rental, supermarket and general day-to-day expenses. But according to David Wild, Deputy Executive of the Institute of Public Affairs, IPA, it's about to get a whole lot worse for those that don't have the luxury of several paid-off homes in their name. What about a couple of hundred? It's never enough. There's been a whopping 9.9% decrease in the number of private sector housings getting building approval since December 2023, according to the latest data from the Australian Bureau of Statistics, with overall dwelling approvals dipping by 1%. This was buoyed by a 14.5% rise in the approval of non-house dwellings such as apartments. Aussies who do not own homes have been slugged with gargantuan rent increases, particularly in major cities, as the demand soars, while countless others who plonked their life savings on a deposit are now finding themselves in considerable mortgage stress. So whichever way you're fucked, right? And I know I have conversations with our investors on a regular basis, and they're like, "Oh, I'm doing it tough, you know." And it's like, "Well, you put your rent up, right?" And it's like, "Yeah, but I'm not making my $50 positive cash flow this week." It's like, wait until the rates drop, rents go up a little bit harder. You'll be fucking rolling in the cash. That's the spread that's there, and that's what happened on a minuscule scale for me in 2008 that helped me retire in 2009 amidst the GFC. This is like nothing else seen before now. Aussies who don't have homes will be slugged with rent increases, particularly in major cities. Governments at all levels are setting Australia up for an economic and humanitarian disaster. As latest dwelling approvals show, we are simply not building enough houses for first home buyers and new migrants alike, despite record intakes. Latest ABS statistics shows that the Australian Housing Association, which revealed a housing construction shortfall of 200,000 dwellings against the federal government's target over the next 5 years. The research from the Institute of Public Affairs has also outlined that there will be a net housing supply shortfall of dwellings, 252,000 dwellings in the years up to 2028. The migrant boom following the post-border reopening, Corona, has unbalanced the scales, with 2023 marking the first year in Australians' history that more than 1 million migrants entered the country. 1 million. We've been talking fucking 650, right?
I don't think so.
The million, right? Million! That's like fucking dropping Perth and go, where's the infrastructure for, right? That's like taking Hobart, let's think about some numbers, right? Hobart, Darwin, Townsville, and the fucking southeast Queensland corridor from Tweed heads all the way up to Brisbane, and dropping it into the country, go, oh, you can sort it out, you've got the same roads to be on, you know. Tell me your roads got any better. Tell me these got any better. It's pretty crazy, the stats. So that's the first time that it's saying 1 million, right? This is mainstream. This is news.com, right? These are some professor expert fuckers that are out there talking about these. Anyway, there's some nice charts there showing the number of dwelling units seasonally adjusted. You can see that the amount is dropping that they're building, and the amount of people is increasing. Right? Here's dwellings. It's amazing. Amid these challenges, public sentiment appears favour temporary halt on migration, with IPA polling indicating 60% of Australians will prefer a pause on migration. Bring more people in. Bring them in. Because causing a gargantuan, as you saw on the previous page, impact on the system. And you guys, like, we're all impacted. And we're all able to benefit from it. If these guys are using it there, everything's a manipulation, everything's a show, and they've created the stage for us to play out. Anyway, I think I've said enough on that part. Should we go and read a few questions?
Yeah, we can do that.
Yeah. It goes here. For many people, it's already become their reality. Do you think they'll people? Where are we at? It says here. Hopefully, it'll mean rates go very low. It'll cause the hyperinflation. Correct. Once the rates come down, we're going to see massive inflation. It may not be at the start, but trust me, all the signs that are out there. Go and research throughout history. All the hyperinflations that have occurred. What has led up to them? Go spend maybe 3 hours looking around on YouTube. What happens in a hyperinflation? What are the preview signs for a hyperinflation? Right. I sent some of the videos in the Birch. I didn't put them all in there. Otherwise, there's lots of other junk in a video that isn't relevant. That it's different. So, but yeah, Chad says here, I don't want to be in debt when the shit show implodes with a black swan event. Well, I think the debt is a good thing to be in when a black swan event hits. Because when you see that they're printing it too far, the only way out of this is for them to print their way to a solution, but they're just kicking the can down the road, and it's like that drop of water, 1 drop, 2 drop, 4 drop, 8 drop. You don't notice it until there's like buckets going. Oh, I see a little bucket down there, and then eventually, within a few drops in the arena, the whole thing fills up. Brendan says here, do you think they'll ever be able to take properties off us, like the WEF says, you'll own nothing, and the book is called The Great Reset. The Great Taking, sorry. You'll own nothing and be happy. Someone will own something because you can't have no one owning anything, otherwise it'd be back in the Stone Ages. It's a control mechanism that they're taking. And do we own stuff already? Like, who owns their car? Let's have a poll. Who owns their car? Who has a loan on their car, right? You don't have to answer that, right? Just using it as hypothetical. Go out and ask the 20 people in your street, how many people own their car? How many people have it on a loan, right? You have financial instruments. There's all these instruments around us. We're going to be able to, the more that this increases, the less control, the less assets, the less things people are going to be able to keep their hands onto. So I think it will be a big split between the wealthy and the not so well off. Brendan says here, we're free-range humans on a tax farm. We're free-range communists, that's what we are. The more builders go broke, the better. Good for my asset values over time, exactly. For many people, it's already become a reality of owning nothing and being happy. How low could rate go when they start cutting? Likely a cash rate if below 3%. It's exciting. The cash rate goes below 2.8. I can retire at age 26, exactly, right? So there'll be a point where I believe we will see negative interest rates. I said that many years ago. I still believe on that. This next cycle, we'll start seeing how low things can go. Be warned, though, that when we start seeing things go to 0% interest rate, 0.25% or whatever, that it may shoot up to 50% interest rate. It could shoot up to 100% interest rate. People are like, oh, fuck, I can go up to 100% interest rate. When our currency loses all of its value, there'll be a point where the great reset comes in. It'll be a reset of our currency. You would want to get out of debt. So there would be a point where you want to get out of debt. I don't believe it'll be until 90% of the way through this cycle. We're probably 30% of the way through. So still another good 5, 6, 7 years, in my view, in this cycle. So time will tell, and common sense will prevail, and it's exciting to be alive. We're all cool. Keep up the great work. Thanks, Charlie. Paul, pleasure, mate. Pleasure. Thanks for watching and enjoying the content that we put out. So, on that note, I'm going to hand it over to Wayne. I felt like I've been on a big fucking roll.
No, you always do this.
I'll leave it to you, mate. So, you can talk about the topic of the day.
So topic of today is for people with a portfolio, people who want to grow their portfolio, some maybe perceptions that I hear when I speak to people, and maybe some misconceptions about the market.
What are some of that?
I guess, I always hear, I'll wait for rates to drop before I enter.
Rates have gone up for 18 months, right? They've gone up for 18 months.
But I understand people can't service, right? They find it tough, and I understand on that side of things. But they're also thinking the price of the property is different to the price that we find for them. So, we're not dealing with the $1 million mortgage.
But they're still going up.
Oh, they're still going up.
Still going up.
100%.
So if interest rates are going up, prices are going up, what's going to happen when they drop interest rates? Like, I always think like if everyone, if we've got 100 people watching the video, how many people in there can buy today? Let's say 50 can buy and 50 can't buy. The 50 that can't buy, if they could buy, would they buy? Yes. What's stopping them from buying? Well, high interest rates. Right? What happens if interest rates drop? Well, fuck, I'm going to jump in the market.
Yeah.
But
that's going to cost me more to do it.
Correct.
Yeah.
And then you're paying higher for the purchase price, and your debt isn't working for you because you haven't structured yourself correctly. You haven't got a good strategy.
Yeah. Whereas what we do is, if you can get in on a lower price point, use that as leverage to get to the next one, and then build your portfolio that way. So,
what do most people think that they have to spend to get into a property when you speak to them?
My broker said I can service for 600,000.
Well, I can't buy anything for 600,000.
Yeah, and I can't buy it. And then I say, well, we could find you, 3 properties for 200. Where the fuck do you find 3 properties for 200?
They must be good. They must be falling down. What opinions do people have? Let's say we buy a 200 grand property. What opinions do people have about a 200 grand property?
Yeah, how old is it?
How old is it?
Yeah. What work needs to be done?
Yeah.
Is it? Yeah, does it need a reno?
Must be in the back of a book.
Yep, back of a book.
It'll never go up. It must be household tenants, right? I mean, over all the years that you've been here, right? Everyone remembers Birch would go out and buy household houses, right? How many percentage, let's say out of every 100 properties we buy a fuckload of properties, guys. We buy a fuckload of properties. Let's say out of every 100 properties that we buy, how many of those 100 would be a housing commission house?
Ex-housing or current housing?
Ex-housing or housing? Either.
I don't know.
Never seen it.
No, doesn't see them.
I don't think the last time I bought something off the Department of Housing would be about 7 or 8 years ago.
Yeah.
It would be the last time we bought something from Houso. In a Houso area, maybe 1 out of 200. That's like 0.5%, right? The areas, like without giving away areas, like we're buying in Sydney Metro, we're buying in Perth Metro, buying in Brisbane Metro. I'm talking like fucking CBD, blue chip areas. Like we're picking them up. Cheap.
Yeah.
People think you can't do it. Units never go up. There's another one.
Yeah, another one. Yeah, that's on my list. Yeah.
Interesting. What other things do you think?
I guess my real estate agent told me I could get this value.
Yeah.
But the bank values it differently.
It's always a trick. Always a catch, eh?
So one of the things that we find with our clients who use our brokerage, is the valuations.
Yeah.
It's about knowing. It's about having the right finance structure in place. And if you've got a broker who is not used to dealing with the lower price point market and manipulating the lenders in terms of the valuations.
We can't manipulate those.
Not manipulate, it's probably the wrong word, but
understanding
which lenders will give better valuations than others.
On the asset type.
Yeah.
Which banks favour in their policy to allow for certain, assets and the palette of the bank to lend. Yeah.
Yes, and that leads back to, units don't go up in value. Well, it's not always about the value of the property going up in value. It's about what will the lender give me for that property. Will they give me more money to go to the next one? So.
I went through a list today from this suburb, that region, and I printed off 300 properties that we bought in that region in the last 2 years, right?
Is that the list we did?
Yes, that list, right? And I sent it over to the finance, and I'm like, let's go and revalue everything. And when I was looking through that list, thanks a lot for that, everyone in the team did it. We've got a list of all our clients' properties that we bought in this one location, and all out of that, like the clients don't know what's happened to their properties, right? They don't know that we're getting values of 290,000 in their suburb, right? And we bought these things, I was looking at like 150 grand, 180 grand. Now they're 200, 220. You can't buy them out under 290 now. And that's in a year they've doubled. In a fucking year they've doubled, and the rents are $400 a week. It's like buying it at 300 grand and now you're getting $400 a week. It's like, it's acceptable, but for 300 grand, I'd rather be buying in Sydney, not in that location. But the valuation of 300, you buy it for 150 or 200, you can pull out double the amount of your deposit and go again. But I don't understand any broker out there or any buyer's agent or any real estate agent or anyone going, fuck, hey, we can go and crack the bank open and get everyone more properties in their portfolio.
Yeah.
So, yeah.
And another thing is, another, I guess, perception that people have is, well, one thing they don't think about is their goal, their long-term goal.
Mm-hmm.
You know, they don't have a clear picture on what they want, be it a monetary goal, passive income. We're always talking about passive income. You know, what passive income amount is acceptable for you in 10 years' time, 15 years' time. No one can sort of predict the future.
Yeah.
You know, and what we do and you do is sort of reverse engineer that goal and say, okay, well, to get to X amount per year,
What are we going to do?
what do we need to do?
Yeah.
So if people can understand really why are they investing in property, there's other assets out there that you can buy to diversify, but why property? What is that property going to do? People I speak to, you know, I want to buy one property. You know, I'm happy with two properties in the next 10 years.
Yeah.
That's, you know, what are those two properties going to give you?
Yeah.
You know,
It's not going to retire you.
It's not going to retire you.
Yeah. There's a reason why they call them landlords. Fucking lord of the land, though, everything, right? And you got the wealth, the kings and queens for thousands of years. So yeah, it's being able to leverage and participate in that system hasn't always been something that's possible as owning private property. You haven't always been able to own it.
Media.
Okay, tell me more.
No, media perception. Right?
I know, tell me more.
People listen to the media.
No.
But they really only focus on the capital cities, where there's a lot of opportunities outside of those areas.
If you read the news or listen to the news or watch the news, you'd have bipolar. Like you'd wake up in the morning, you'd see an article from whatever news outlet, and it's like property price is going to double. Right? And then in the afternoon, you're watching the property price is going to fall by a half. Right? And I always think about the people because I like people find it difficult to understand that I used to be very mainstream media. Like 10 years ago, I was on the news every channel all day, and I can't be a part of it because I see all these fuckwits that are out there and they own nothing, right? Talk about owning nothing and being happy. These guys are fucking owning nothing and giving the advice out there, right? Like, oh, this is what's tipped to happen, and it doesn't happen. They've got textbook analogies of stuff. They're paid via lobbyist groups and fucking advocates. And I remember some guy came out and he talked about the property market crashing, and he was on 60 Minutes, right? It's like you'd think, oh, this guy's a professor. But why do people go there? If it's Sunday, if you're doing an article, like that takes a lot of energy, effort. What's the fucking point there, right? Mm-hmm. This guy had gone and shorted the property market, the bank stocks, right? So he tried to create like a fear in everyone. Property's going to drop by 40%, whatever the case may be, and he's going to short the stock market. So he's literally, insider trading. But he's from America, so it doesn't really matter because he's here in Australia talking about something. He's the hedge funds.
Yeah, I know.
Yeah. So it's pretty crazy. So be conscious, like always think like who's giving you the advice. I've said some pretty fucking negative things today, right? Property's my business. I still love it. It's my favourite thing, it's my favourite go-to vehicle, but it's important to know the whole thing. There's so many people that go, buy this, buy this, buy this, buy the crypto, buy the shares, buy the managed funds. Like who's paying you? Who's lining your pockets, right? They've got an agenda.
Yeah.
So,
yeah.
What other things?
Market values.
What do you mean by that?
Well, there's many different markets.
Yeah.
Many, where does the market value? Well, how do we determine what is market value and how we perceive below market value, and
Okay.
so there's many factors there that,
Yeah.
that you look at when you're sourcing properties. So
I think everyone should look at it like a value, like if it's below market value, and how do you determine market value? It's like recent sales that are out there, other properties currently on the market, and being able to determine a fair value where comparables be identical to yours.
Yeah. But also with bank valuations, do they look at how their exposure to an area? Because there's areas we've presented CBD locations, and the bank, big four banks won't lend there.
Yeah.
Is that because they're overexposed, or?
Well, in 2020, the start of 2020, and probably 2019 before Corona, 2019, Nelson Bay, CBA wouldn't lend it. I remember buying units there for 180,000, and now they're like 650, 700 for the same units. And CBA wouldn't lend because they thought it was being too risky for them, for their appetite. If we look at Harris Park and the Parramatta CBD, 2150 in Sydney, the banks wouldn't lend. They only lend 70% LVR up until like a year ago because they had too much exposure to that market. In the start of Corona, the Gold Coast, we were buying there for years, right? And then suddenly we couldn't get loans because the banks wouldn't lend there because they had too much risk and they had to mitigate their internal policy. So I had a valuation done on a property. I'm in the process of trying to refinance some stuff. First time for many, many years, for a decade. I've got loans, and I was trying to value the property, and it was with a not so good lender. I'm going to a mad lender shortly, but this lender had gone out there. I've got an agent that's chasing me to sell a property of mine, right? I don't like to sell things, but if the value's right, I'll sell it. He's listed a property behind mine, right? And with one block of land, it's probably worth $3 million, right? Because you can build HX zoning, so it's unlimited height. You can build a tower, right? But if you only got 500 square meters, then the tower's going to be really fucking narrow because it's like a pin at the top, right? So you need more land space so the building doesn't go in too much at the top. So my block would be valuable to this development side. He wants to sell it. He sold one next door over for $9.5 million, right? So it's 2 blocks of land. So that valued at like $4.5 million. I paid like $600 for the thing. And I'd value would go out there, and I was thinking, $2 million, $2.5 million, something like that would be nice. And I think I owe like 300. This guy came in and said $1 million. $1 million. I was like, get fucked. And I told the bank to fuck off. I told the lender to fuck off, and it's not going to happen. But that's just like, where does the value come in at, right? And that's like the worst I've ever seen in 20 years of investing in the property. But 3 banks could send a value out. You've seen it with our clients, and you buy it for 200. One bank will value it at 180. Next bank will value it at 250, and the other one will value it at 270. And it's like, hang on a second, where's the anomaly? And with the stuff that we buy, I'd say out of 500 properties, that maybe one would come in at or just below, and it's just an anomaly of the value is like obviously being on bomb that morning or something and got it wrong. But yeah, what other things do you think?
The old adage of time in the market instead of trying to time the market.
Yeah. What do you mean by that?
Like, I want to wait until all the ducks line up.
Yeah.
Ready to go before I hit the trigger.
Yeah.
So that's a perception that's sort of false or misleading. So,
yeah. I literally see like train wrecks that are happening, or people can do so much good stuff and they're waiting because their perception of reality is one thing, but without them looking at the risk of like their servicing drying up, or how many people had $500,000 worth of equity and then the interest rates went up. They're like, I don't want to get my equity out, and they can't get the equity out because they can't service.
Yeah.
And now they're like, fuck, I want to buy property, please help me. And it's like, well, told what to do. Like,
well, I was speaking with a client yesterday. He's got, he purchased cash.
Yeah.
And he's looking to refi.
Yeah.
And potentially he can take 100K out of it.
Okay.
After that, at 80%.
Yeah.
But to buy the next property, he's not going to need all that. I said, still take it out.
Yeah, wow.
Yeah, still take it all out.
So what you do is later off, I'll shake him down and tell him, no, get it all.
but yeah, put it aside, use what you can for your next purchase, and yeah, you're in a better spot. So.
People also, here's another one, like people think, oh, but I don't need to spend it all, I'm going to be paying interest. Well, get your bank to set up an offset account, and you've got access to it. I don't need it all today. Well, what about if you lose your job and you can't get access to your capital in the future? Rather have access to it and have it structured right at the start. So,
yeah, that was pretty much it.
Selling, people sell, not realising they could swap securities.
But okay, that's a good one. Never thought of that one. So.
Tell us more about that scenario.
Yeah, well, people need to sell for because they're strapped for cash, or there's other things in their life. But if they're selling to purchase more property, that's a sort of take one step back and two steps forward sort of thing. So.
Yeah, I think a lot of people think they buy a property for 300 grand, they've got a 250k loan, just hypothetically, and it's worth 750,000. They sell it and they go, well, I can pay out the debt and we'll have 500 grand in the bank.
You're going to re-enter the market.
You're going to re-enter the market, right? But then if you did that and you can't get a loan, you can keep your 250k loan open, take some of your profit and go and buy 2 more properties for 100 grand, 200 grand a piece, put a deposit down, keep 350 in your account, and go and buy 2 properties using the old loan, which a lot of people don't realise that you can keep a loan open and be able to move forward that way.
Yeah. Okay.
What are some of the big wins that you're seeing with your clients at the moment? Like,
mate, the bulk deals have been great.
Yeah.
That we had. We did one in Brisbane last year. That was a big win.
Tell us, what are the numbers?
265 purchase.
Yeah.
360 revamp.
16 villas, 3-bedroom villas in Brisbane.
Yeah.
When did it settle, roughly?
Just before Christmas.
So say October,
November. Yeah.
So 16 people buy a property for 265. They're revalued at 360.
Well, yeah, that 265 was the 3 bedrooms.
Yeah.
2 bedrooms at 235. So.
Yeah. So they've bought it. They put down 265. They put down like 50k. They're revaluing it, pulling out 100k. 100k. There's 1 deposit turned into 2 deposits. So you can go back and buy 2 more properties.
Yeah.
How many people would we have sent that 16 properties to, do you reckon, roughly?
Probably 200.
200 people, right?
Yeah.
People go, oh, I don't like it, it's in this area or that region or whatever. So 150, let's call it.
We had a few clients buy 2.
Yeah. So 150 people got given 100 grand equity, right? And whatever bullshit story was in their head, like let's say 50 of them can't buy it, we wouldn't have said it to them if they can't buy it, but let's say they've got whatever reason going on at the moment. 100 people got given $100,000 and said no. 16 people or 12 people or whatever took the opportunity, pulled out, put 50k in, pulled out 100k within a month, right?
Yeah.
It's a mad deal. Any other cool stories?
No, there's a few clients doing some renos.
Yeah.
Some fixing.
The rents are going.
Rents are going up. Yeah.
Yeah. I reckon that every one of your clients that bought in the last, up until about say 6 months ago.
I think anyone that bought in 21.
They're up like double.
Yeah.
But I reckon just in the last, up until 6 months ago, they're at least up 50 grand in the last 6 months. Last 6 months, even from like anyone in November that bought, the markets have shifted. You've got all these bad things against it. Currency crisis, wars going on, supply chain issues, interest rates rising, inflation hurting everybody. The markets are rising. We're talking like 50k. Let's put it in perspective, because 50k doesn't sound that much to a lot of people because inflation. 50k on 200 grand, it's like a 20% uplift. Just doing nothing.
Yeah.
Crazy. You just did a bulk deal. Before we went live, we're a little bit late. We're sending out deals to our investors.
We haven't finished.
We haven't finished. We did a bulk deal today, and I think they all went within like a half hour. Like a lot of them have gone.
Got a few accepted.
Yeah.
Accepted.
So they're out there. The deals are happening. I've got one more. Got one more that's coming through in about 10 days' time. So it's similar to the last two that we did, which is cool. And Michael is going to get an email, right? He's literally the next person to get an email, right? I think I said it to someone that he knows, and yeah, he's the next person that's about to get an email from me. So when we get offline, I'll keep getting back to my pushing out the email. But there's some really awesome results that we're seeing out there. Do you see any changes that people should be aware of in 2024, or things people
things aren't getting cheaper. You know, the stock levels of properties below 200 is becoming less and less. That's what I'm seeing on our list.
Very badly.
Yeah.
Very bad.
It's tough to get properties below 200.
Yeah. It's very bad. I've never seen it like that before. Like this. Yeah. Anything else?
No.
Okay. Cool. Do we have anything else to talk about today?
That was it.
I think everyone should get themselves ready for when interest rates do drop, because they will drop shortly. I'm not going to get into a date of when they will, but if we see all the banks start cutting fast, we start seeing these things happen. It's obvious, the writing's on the wall. You should be ready, finance ready to pull the trigger. There's people that I've seen tonight commenting that have access to equity, but they can't access it because of servicing or whatever. 2 interest rate, 3 interest rate. I've got someone in there that's I need to contact them back. They know who I'm talking about. I'm not ignoring them. I'll do a little shout out to them discreetly that we're going to get their principal place of residence when the market goes backwards, right? The interest rates go backwards. But there'll be a window, and that window is only going to be short-lived, because the ability for everyone to be able to service, interest rates smash down 1%, 2%, 3%, there'll be a window where people go out, and there's people still selling, thinking, oh, my property's worth this amount. That stock will get dried up as these people can come through. So you want to be getting finance ready, getting your ducks lined up, equity-wise, knowing, okay, the minute that happens, go all in.
Be ready.
Let's read through some comments here. If you've got any questions, send us a question through. Luke here says, the best return I've had was from townhouses and units, capital growth, rental yield and depreciation, water combo. It's amazing, eh?
Yeah. Luke's doing well.
Yeah.
Mike's doing well.
I think it's a different Luke. There's 2 Lukes the same name. It's a different one.
Oh,
yeah,
okay.
It's a different one. Yeah. But I know that Luke as well. What else have we got here? I think we read through a lot of the questions beforehand. So. Cool. Wayne, what you do with our investors is very crucial. I've seen you take people that have had no property, 10 property in a year. I've seen you with people that have come to us with financial distress, like really whacked up positions, things that have gone wrong in their life and whatnot, and you've been able to turn their positions around and guide them.
It's really just guiding them. I'm not here to give advice financially.
Yeah.
We sort of plant the seed and don't push too hard. And people make their own decisions, but if they like the way we do things and then it resonates with them, it works.
See, there's a lot of people out there talking about property, and we talk about property. We deal with property, one of our core things we do, but it's a holistic view. You can buy 1 or 2 properties, but getting 10, 20 properties, 30 properties is very difficult to do. And the relationships that you have with the people that you work with, you're shepherding them to get to, to safety. So, John just wrote here, 110 grand townhouse in North Queensland, 118,000 townhouse is renting for $330 per week.
Yeah.
Right? When did you buy that, John? I think it was only less than 12 months ago, or maybe just 12 months ago. They're selling in that same area, same place for 210, 220,000 now. So, it's really cool.
Yeah.
If you had 10 of them, you'd be retired. So, cool. All right, guys. Well, if you want to learn more, if you need help with getting your portfolio built or refining where you're at or tweaking or taking things to the next level, probably the best place to start is by having a chat with Wayne.
Yeah.
You can contact us at 1300 367 925, email us at admin@binvested.com.au. But most easily and importantly, we have a link in the description. You can click onto it and you can make an appointment with Wayne by clicking on the link in the description. If you're watching this from other platforms,
Has my calendar, I think. So
it has Wayne's calendar in there. Book in the chat. It's free. Just have a discovery session. You never know, right, where a conversation could lead you to. Whether it's just tweaking something from finance, whether it's tweaking something with your rental portfolio, whether it's whatever that you can tweak to push yourself forward to get to where you want to be.
Sure.
So thanks, mate. Thanks for all you do.
No worries.
Thanks, everyone, for watching. We'll catch up in a couple of weeks. Make sure that you come on next Wednesday. I'm holding a webinar with Rose Renouf, who is the head of Xeno Finance. That will be to be able to register for the webinar. There'll be links in the page. If you don't have access to it or haven't been alerted to it, send an email to the team at admin@binvested.com.au. You have to register for the webinar. It'll be fun because finance is the important part. Rose is going to go on to talk for a couple of hours about how to build a portfolio.
Literally.
She will go, eh?
Yeah.
She'll talk more than me. So thanks a lot for tuning in, guys. Have a great week. We'll catch up soon. Bye for now.